Hello, everybody. I'm Mark. I'm a stock market jobber. I am pretty qualified to teach people about trading. I spent about 20 years in the institutional trading world. I was the head of trading at three different institutional money managers where we managed well over $1 billion at each. I've overseen all kinds of trading strategies, including various hedge funds. I was a market maker. And I also got brought into the industry by the great Mario Gabelli, and I traded directly for him, and then I went and traded directly for Steve Cohen. So I'm fortunate enough that I've traded for two of the best money managers in history. And anyway, I just want to give you a little lesson on technical analysis here on Uber. Now, overbought stocks that get to resistance tend to sell off. Let me say that again. Overbought stocks that get to resistance tend to sell off. What is overbought? Well, most of the time, a stock stays within its typical or what would be its normal or historical trading range. If it gets aggressively bought and gets above that, we call it overbought. Now, why is this important? Well, overbought conditions will attract sellers into the market because they are going to be expecting a reversion to the mean. When something is overbought, they're going to expect it to go lower. And their sell orders may actually push it lower. Down here, we have what we call the relative strength indicator. It is a commonly used momentum indicator, and when this blue line gets above the red line, it indicates overbought conditions. Now, what is resistance? Resistance is a large concentration of sellers or sell orders around the same level, trying to sell their shares around the same level. In this case, it's 37.25. That's what this blue line is here, 37.25. So back here last March, we hit resistance, and then we just hit resistance this morning, and we've staged a pretty nasty reversal off of this resistance. So you might ask yourself, well, how is it that a level that was resistance a year ago could be resistance again? Well, believe it or not, there were people that bought up here who regretted buying when the price went lower, and a lot of them told themselves, well, you know what? I'm going to hold on to my stock, and if it gets back up to my buying price, I'm going to sell it, and that way I can get out at break even. So we tend to see resistance a lot at former peaks. You can even see it here. This peak was the same level as this peak. Another little trading lesson here that's apparent on this chart is how what was resistance can sometimes turn into support. Now this happens because of seller's remorse, right? People sell, and when the price goes higher, a lot of the people will say, you know what, I shouldn't have sold. I want to buy my shares back, but only if I get them for the same price I sold them at. So at the stock market jobber here, we teach basic principles. We don't do crazy esoteric stuff. I talk about levels, trends, momentum, and psychology. In the institutional trading world, that's what the best traders are focused on. We don't use silly things like Fibonacci and Gann theory and so forth. Um, so if you understand that a chart is a graphical illustration of investor psychology, well, then you're going to have a much easier time understanding charts and being able to pick your levels and being able to make money. So that's it. Please subscribe to our YouTube channel here. Please visit our website, stockmarketjobber.com, and I will talk to you soon. Thanks, everybody.